Welcome back, everybody. Today we're going deep on Chennai Petroleum Corporation Ltd, or CPCL for short.
Okay.
You sent over a whole bunch of documents about them.
Right.
Looks like we've got some official reports and a couple of analyst notes. And basically, you're trying to wrap your head around how CPCL did in Q3 of fiscal year 2025.
Gotcha.
So we've got the official communication from CPCL to the Bombay Stock Exchange.
Okay.
The file name is a jumble of numbers and letters. So let's just call that the CPCL report.
Makes sense.
And then we've got pasted text, which
Yeah.
has some interesting commentary from analysts.
Sounds good.
So two main goals for our deep dive today.
Okay.
First, we got to crack the code of all this financial jargon and figure out how CPCL actually performed this past quarter.
Right.
And then we're going to put on our detective hats and look for any clues about the future.
Okay.
Did they announce any big investments? Are there any challenges on the horizon? Stuff like that.
Got it.
So pasted text starts off with a really important question. How did CPCL perform in Q3 of fiscal year 2025 compared to last year?
Right off the bat.
Yeah, exactly.
So before we get lost in the numbers, there's something important to keep in mind.
Okay.
We've got two sets of financial results here, standalone and consolidated.
Okay.
That means we're seeing two different views of CPCL's performance.
Makes sense.
Standalone is just CPCL by itself, just their own operations.
Okay.
But consolidated, that includes all their joint ventures.
Like what?
Well, there's Indian Additives Limited, National Aromatics and Petrochemicals Corporation Limited,
Okay.
and Cauvery Basin Refinery and Petrochemicals Limited.
So it's like two different lenses, one zoomed in and one zoomed out.
Exactly.
What happens when we zoom out and see the whole picture with those joint ventures?
Things get interesting.
How so?
Well, the CPCL report shows a net profit for Q3 of fiscal year 2025.
Okay.
But then when you look at their standalone results, they actually show a net loss for the first 9 months of the fiscal year.
Whoa, so they're in the red on their own.
Yeah.
But all those joint ventures are pulling them back into the black. Seems kind of risky, doesn't it? What if one of those ventures has a bad quarter?
You're absolutely right. That does make CPCL more vulnerable.
Yeah.
Makes you wonder what their long-term game plan is.
Like, are they deliberately leaning on these ventures while they try to fix their own problems?
That's the million-dollar question.
And it makes you think, is that really sustainable?
Yeah. And there's another layer to this.
Okay.
The auditor's report mentions that 2 of the joint ventures didn't even have their financials go through a limited review.
Hold up. Now, what is a limited review and why does that matter?
So a limited review, it's basically like a mini audit.
Yep.
It's not as in-depth as a full audit,
Uh-huh.
but it still gives investors some peace of mind.
So the fact that these two ventures skipped it,
It raises some eyebrows about transparency, for sure.
like we're just trusting CPCL's word on how those ventures are doing.
Basically, yeah.
This is a little unsettling.
It is a bit.
It's like we're missing some pieces of the puzzle here.
Yeah.
So, okay, if we shift our focus back to CPCL itself,
Right.
both audit reports point out this thing about their board not having enough independent directors.
Right. This has been going on since November of last year, apparently.
And what does that mean for someone who's thinking about investing in CPCL? Should they be worried?
Oh, absolutely. A lack of independent board members is a big red flag for investors.
Okay.
Well, it raises concerns about oversight and, good governance.
Oh,
Without enough independent voices, you risk having groupthink and less accountability.
uh-huh.
And it might be a sign of deeper problems within the company.
So we've got potential transparency issues with those joint ventures.
Right.
And now we've got this lack of independent oversight on the board.
Yeah.
Are we seeing a pattern here?
Definitely something to keep an eye on.
And there's one more thing in the report.
Oh, yeah.
It mentions that CPCL hasn't had a woman on their board since May of 2024.
Wow. Almost a whole year.
Makes you question their commitment to diversity and inclusion,
For sure.
and what that says about their company culture overall.
Absolutely another factor to consider.
So we've got these red flags about the board
Yeah.
and the transparency of those joint ventures.
Right.
Anything else stand out to you about CPCL's performance this quarter?
Well, the analyst notes and pasted text, they're really worried about how CPCL is handling its debt,
Makes sense.
especially with all the ups and downs in oil prices these days.
Yeah, energy prices are all over the place,
Exactly. And that can really hurt a company's bottom line.
especially if they're already carrying a lot of debt.
Exactly. If oil prices were to tank, it could put even more pressure on their finances.
And maybe even make it tough to pay back their loans.
Exactly.
So let me just recap here.
Okay.
We've got a company that's relying heavily on its joint ventures to stay profitable.
Right.
But There are questions about how transparent they're being about those ventures.
Yeah.
Plus, there are concerns about their own internal performance and how they're managing the board.
Uh-huh.
And all this is happening while the energy market is going crazy
Mm.
and they're trying to juggle a bunch of debt.
It's a complicated picture for sure.
It definitely seems like there's more to this story than meets the eye.
Absolutely.
So CPCL's got their hands full right now.
Yeah.
What else can we learn from these documents about where they might be headed?
It really makes you think how important those joint ventures are.
Yeah,
Their performance can totally change a company's results.
for sure.
It's like a company isn't just what's happening internally, it's
Yeah.
all connected to this bigger network.
It's kind of like an ecosystem, right?
Exactly.
You can't just look at one organism in isolation.
Right.
You got to see how it interacts with everything around it.
That's a great analogy.
So zooming back out,
Yeah.
it makes me wonder about CPCL's overall strategy.
In what way?
Well, are they intentionally leaning on these joint ventures while they deal with their own internal issues?
It's hard to say for sure without having more information.
Yeah.
But it's a good question to ask.
Is this reliance on joint ventures a deliberate choice, or are they scrambling to stay afloat?
And it just shows how important it is to really understand how these joint ventures work.
Okay.
How much control does CPCL actually have? What are the terms of the agreements?
Those are things investors would definitely want to know more about.
For sure.
So we've got this heavy reliance on joint ventures,
Right.
potential transparency issues with their finances,
Yeah.
and concerns about CPCL's own internal performance.
Uh-huh.
Anything else we should consider when we're thinking about CPCL's future?
Well, remember those global oil price fluctuations we talked about?
Yeah, they're all over the place.
That's a huge factor for CPCL.
Right.
It can make a big difference to their profits.
Because if oil prices go down,
Their margins could get even thinner.
oof, and that would make it harder to deal with all that debt they have.
Right, especially if they're using profits from the joint ventures to pay it off.
Exactly. That's why those analysts were so focused on CPCL's financial health.
They want to know if the company can handle tough times.
Right. Can they weather the storm? Speaking of storms, any other potential risks we should be thinking about?
Well, we already talked about those board composition issues.
Right, the lack of independent directors and no woman on the board for almost a year.
Yeah, it raises questions about their governance and ethical practices.
It makes you think maybe those issues are part of the reason CPCL is having these challenges.
Possibly.
Could that lack of oversight be affecting their decisions, their risk management, even their ability to keep good employees?
It's possible a diverse and independent board brings a lot to the table
Yeah, different perspectives and experiences.
that can lead to better decisions and a better company culture.
So if you were an investor looking at CPCL, what would be your main takeaway from this deep dive?
I'd say CPCL has potential, but there are definitely some risks.
Okay.
Those joint ventures are a big part of their profits.
Right.
But we have to ask, are they sustainable in the long run? And are they being transparent about them?
Sounds like there's a lot more digging to do before making an investment decision.
This deep dive is a good starting point.
Yeah.
But it's just the tip of the iceberg. Anyone seriously considering investing in CPCL needs to do a lot more research.
Look into their finances, their strategy, and their governance practices.
Exactly.
It's like we've put together the frame of the puzzle.
Okay.
Now we need to find all the pieces and see if they fit.
And even then, there's always going to be some uncertainty.
Right.
That's just how the markets work.
But if you do your homework
Ask the right question.
and really think about all the information.
You can make smarter decisions.
Now, you mentioned CPCL's strategy.
Yeah.
Do these documents give us any hints about their long-term vision? Do they have a plan to get past these challenges and become really profitable?
Well, these specific documents don't give us much to go on.
Okay.
Not a lot of detailed predictions about the future, but we can look at what they've done in the past
Oh.
and think about the overall industry.
Like what's happening in the energy sector as a whole.
Exactly.
So put on your detective hats again. Based on what we know, what are some possible scenarios for CPCL's future? How could they address these challenges and set themselves up for success?
Well, one obvious path is to try and improve their own operations.
Okay. Make themselves stronger.
Exactly. Make themselves less reliant on those joint ventures.
Build up their own strength instead of using a crutch.
Right. But that's easier said than done.
Come.
Making a company more efficient takes time and money.
Uh-huh.
You need strong leadership and a clear vision.
And they got to do all of this while the energy market is going crazy.
Right. It's not easy.
So that's one option.
What are some others?
They could go all in on the joint venture strategy.
Okay.
Find new partnerships, expand into new markets, maybe even buy a bigger stake in some of their existing ventures.
So they'd have more control.
Right. And maybe reduce some of the risks.
But that still takes a lot of investment.
True.
And it doesn't fix the problems with their own operations.
You're right. It's a trade-off.
It depends on how they see themselves and the opportunities out there. Do they think they can turn things around on their own?
Or do they think partnerships are the way to go?
It's a big decision.
It feels like they're at a crossroads.
The choices they make in the next few years are going to be crucial.
What should investors be watching for? What are the signs that CPCL is heading in the right direction?
Keep an eye on a few things. First, are they getting better financially on their own?
Without the joint ventures.
Exactly. Look at their operating margins, their debt-to-equity ratio, their overall profitability.
Are they standing on their own 2 feet financially?
That's what you want to see. Second, are they doing anything about those board composition issues?
Okay.
Have they brought in new independent directors? Are they making the board more diverse?
Are they taking those concerns seriously?
Exactly. And finally, pay attention to how they're talking to investors.
Okay.
Are they being open about their challenges?
And their plans.
Are they giving clear and consistent guidance?
Transparency and communication are so important for building trust.
Couldn't agree more, especially when a company is dealing with as much as CPCL.
So we've talked about CPCL's performance, their challenges, and the paths they could take.
We've covered a lot of ground.
What's your final thought for our listener as they continue to learn about this company?
Don't take everything at face value.
Okay.
Don't be fooled by the profits from those joint ventures.
Dig deeper.
Look closely at the financials.
Examine their choices.
Think carefully about the risks and the rewards.
Investing is all about information.
The more you know, the better decisions you can make.
Great advice. So what are some practical steps our listener can take to keep researching and really understand CPCL?
Go back and read those analyst reports we talked about.
Okay.
They often have really useful insights into a company's financials, their competition, and how they might grow.
So they can help you understand what the experts are thinking?
Exactly. But don't stop there. Read industry reports and news articles, too.
Get the bigger picture.
Understand the whole energy sector.
See the forest instead of just one tree.
Right. And as you learn more, don't forget to be critical.
Right.
Ask questions, challenge assumptions.
Don't just believe everything you read.
Exactly. You got to think for yourself.
Flex that critical thinking muscle.
And remember, investing isn't just about the numbers.
There's more to it.
It's about understanding the story behind the number.
What's motivating the company? What are their goals?
What are the risks and opportunities?
It's like putting together a narrative.
The numbers are just one piece of the puzzle.
The more you understand that story, the better your investment decisions will be. So every time we think we figured CPCL out, there's another layer to uncover.
Right. It's fascinating.
So we talked about CPCL maybe focusing on making their own operations better or going all in on those joint ventures.
Yeah.
What are the pros and cons of each path? Like what traps do they need to avoid?
If they go the internal improvement route, they can't expect a quick fix.
Right.
Turning a company around takes time and resources.
It's a marathon, not a sprint.
Exactly. It takes a lot of effort, the right investments, and some tough choices.
They need a solid plan, and they got to stick to it.
Absolutely. And they need to make sure they're putting their money in the right places.
Focus is key.
Otherwise, they could end up worse off than they started.
Okay, so focus and prioritize. What about the joint venture strategy? Any pitfalls there?
The biggest danger is putting all their eggs in one basket.
Relying too much on just a few ventures.
Exactly. If one of those ventures goes south, it could drag down the whole company.
They need to diversify.
Find different types of ventures, different partners.
Spread the risk.
Right, and they got to be really careful about the fine print in those agreements.
In terms of the deals.
Yeah, they need enough control, and they can't take on too much risk.
So due diligence is super important.
Absolutely. They need to really vet those potential partners.
Understand all the details before signing anything.
It's like getting married. You don't just jump into it blindly.
Right. You get to know the other person first.
Understand their values, their goals, their financial situation.
Okay, so what if a joint venture just isn't working? Do they have an escape plan?
That's something else to think about. They need a way to get out if things go bad.
An exit strategy.
Yeah, how will they split up the assets? Who's responsible for the debts? What if there's an agreement?
Plan for the unexpected.
Hope for the best, but prepare for the worst.
And they need to figure this out before jumping into bed with a partner.
Way easier to negotiate when everyone's still happy.
Okay, so we've got the paths CPCL could take and the traps to avoid.
Right.
What's the secret sauce for their success? What really matters?
To me, it boils down to three things.
Yeah, okay.
Leadership strategy and execution.
A three-legged stool.
You need strong leaders who can set a clear direction.
Okay.
Get everyone on board and make it happen. You need a good strategy.
One that makes sense for them.
Yeah, a strategy that matches their strengths and takes advantage of the opportunities out there.
And then they have to actually pull it off.
Exactly. Execution is key. It's not enough to have a good plan.
You got to make it real.
Right, and that takes talent discipline and flexibility.
Hire the right people, build culture of accountability, and be ready to change course when things change.
You got it.
Sounds like a lot of challenges, but some exciting possibilities too.
Oh, absolutely. The energy industry is always changing.
Yeah.
That means risks, but also rewards.
Right.
Companies that can adapt and position themselves, well, they have a chance to really succeed.
Well, I think we've given our listener a lot to chew on.
We've covered a lot.
We looked at CPCL's financials,
Their joint ventures,
their board,
and their possible paths forward.
but as always, the deep dive doesn't stop here.
This is just the beginning.
We've given you the framework.
Now it's up to you to fill in the blanks.
Keep asking questions, keep digging, and make your own conclusions. So to our listener, we say don't be afraid to go deeper.
Challenge what you think you know.
Get different viewpoints.
And most importantly, never stop learning.
The world of finance is constantly changing.
The more you understand it, the better you'll do.
Thanks for joining us on this deep dive into the world of CPCL.
It's been a pleasure.
We hope you've enjoyed the ride.
Until next time, keep exploring.